Good evening, everyone. My name is Chai Karve. I am a senior director at LCR Capital. We have all of us have kind of interacted on some level with EB-5, and I wanted to welcome you to our webinar this evening. Just a little bit about myself. Chai Karve, originally from India, but have been living in the US for 30 years. I have been in the industry for about 10, 11 years. Have always had a great relationship with LCR, and we have competed, and we've been trying to work with each other for a long time, and here we are, finally at a really good time in this industry where things are going really well. I'm going to start by introducing Sherman Baldwin, our CEO. Me and Sherman, we've known each other for 5 years and have stayed in touch, even though we were friendly competitors. And I'm very happy to be here on the same team today. I really want to talk a little bit about Sherman before we move forward. USSM is a very special offering. It really is amazing, and Sherman played a big role in it. I think we were able to have this offering because of Sherman's background and his connection to the Pentagon, and our founder, Suresh Rajan's connections to Capitol Hill. So it's only fair that I share with you a little bit about Sherman's background. Sherman graduated from Yale and served in the US Navy as a carrier pilot, and then as a strategic planner for the Joint Chief of Staffs, and then as a special assistant to the Secretary of the Navy. After leaving the service, Sherman got his MBA from Harvard in 1996, where he met our founder, Suresh Rajan. They both became great friends. Sherman must have had affinity towards India even then. They both worked at McKinsey and Company together and formed a great friendship. In 2021, Suresh approached Sherman to join LCR when he founded it, but it was not the right time for Sherman. Sherman was raising a family and was on a different path. Suresh kept in touch and kept trying to recruit Sherman, and finally succeeded in 2018. And Sherman joined LCR Capital Partners, and now he's our CEO. In 2021-22, when we knew about the new regulations in EB-5 and rural offerings, Sherman and Suresh were at work. And I'm going to now let Sherman take the story on from there. Sherman, your call.
Thanks, Chai. Appreciate it. And we're thrilled that you're now on the team as opposed to being a friendly competitor. So it's great to have you on the team. Well, welcome, everybody. Appreciate you making time this evening. I'll be very brief, but I do think it's relevant, as Chai has said, both my military background and Suresh's congressional background at the beginning of his career. And, as we were making our way through the pandemic, thinking about how to grow our business, we wanted to come up with something that would give us a programmatic advantage in the industry and have a series of offerings that would enable us to get expedited approval from the USCIS for the types of projects that we selected. And our concept was to develop a strategy focused on the U.S. national interest. And as we thought deeper about that, one of the things that became very clear to us was that rare earth and critical minerals could be a terrific place to deploy EB-5 capital to help secure the domestic supply of rare earth and critical minerals for the United States. There's both a presidential executive order from the Trump administration and from the Biden administration. So this is a bipartisan issue. I've spent a fair amount of time with Suresh down in Capitol Hill talking to US senators who were very supportive of what we're doing. As opposed to taking capital from China and deploying it to Manhattan to build skyscrapers, we're out in rural Missouri creating thousands of jobs and helping to secure the domestic supply for rare earth and critical minerals, which are critical for consumer electronic devices, electric vehicles, and defense technologies. So we're very excited about what we're doing. The way we connected to USSM, Suresh and I both know some very senior leaders at Goldman Sachs. And once we developed the strategy and did our research and identified at least a dozen different companies, we went to Goldman figuring they would know some of them. And we were right. And they introduced us to the leader of their resources group. And that leader introduced us to at least half a dozen of the companies that we had identified with our research that we thought would be interesting to talk to. We were immediately drawn to USSM for a number of reasons that we'll talk about tonight. One of them was the talent of the management team. Alistair Aaron is a tremendously competent executive and was in the CFO role when we engaged with them. And we worked closely with Alistair and the CEO and co-founder, Stacey Hasty and Randy Waterfield, to design and shape the EB-5 offering that we have today. I worked very closely with Alistair over the last close to 2 years now, and it's been great to work with him. He has an intimate knowledge of the business. He has recently decided to pursue new opportunities at a very logical break point in the company's existence. The board decided to bring on a gentleman named Tom Bullard, who is going to be the new CFO, is a very experienced public company CFO, has taken 4 companies public during his career. And Alistair had just led, the raising of $245 million from Appian Capital and HPS, his old firm. And so it was a very, logical time for Alistair to move on and take the next step. But he's an advisor to the business still, which is great. And he's been very generous to agree to join us this evening and answer any questions that you all have. So with that, let me turn it over to Alistair. And I think Alistair will talk a little bit about his experience, raising the first round of capital when he was on the investor side, looking at U.S. strategic metals, and then a second major round of fundraising while he was the CFO. So he has a unique perspective, both from conducting a lot of the due diligence and then, supporting and answering due diligence questions from several very large institutional investors. So Alistair, over to you.
Just 1 minute, just one housekeeping issue. When Alistair gets done, just type your questions in Q&A and we'll have them answered. Thank you.
Thanks, Sherman. And then also thanks, Chai, for organizing this and to everyone else for joining tonight. So when we were thinking about the EB-5 offer, I do want to say we were excited to partner with LCR. Sherman came out and visited the site in Missouri. And so that meant a lot to us to really partner with the company, work through our capital development projects, and then also really visit and get to know the co-founders. And then Chai has also been to site. So it really has been a partnership where LCR has put boots on the ground, and that meant a lot to us. As far as my background, so I worked at HPS Investment Partners in New York. They're a $100 billion asset manager, primarily focused on direct lending. And so we provided the initial capital to begin Missouri Cobalt, the JCE here in 2018. And so I had the unique privilege of starting as an investor and going through the initial diligence and really getting to know the founders and watching the business grow from 2018 to 2021. And so then in 21, I made the decision to really bet my career on the company. I left New York, moved to Missouri, which is definitely a culture shock and a little bit of a change, but it was a pleasant one and definitely a positive advancement for my career as I joined as the CFO. And initially, I was really focused on making the company more digestible to outside investors. And so when it's a startup or a younger company, not everything is built out. And so what we really wanted to do was professionalize the operation and get a lot of third-party reports and have a lot of people that have vetted the business and make sure that all of our numbers tie out. And so we ran a variety of different capital processes, but the most important piece was we weren't able to run a capital markets process in 2021 at the beginning, and we had to do a 8 to 10 month campaign to get ready for accessing capital markets. And so what I mean by that is we completed a large, what's called a feasibility study on the project that was conducted by a third-party engineering firm. And that engineering firm came, visited site 6 times. They went through all of our data, all of our cost estimates, our financial modeling, as well as all of our process engineering. And so what that allowed for was validation from a sophisticated third-party engineering firm in the United States, and then also provided a lot of insight to us as a company as to where we could improve and what we could continue to do. But then that culminated in 2021 with the investment by Glencore. Glencore is one of the largest commodity trading firm in the world, and they operate a variety of mines spread from the Congo all the way into Asia. And so Glencore went through all of our processing data. They read the feasibility report that I just mentioned. And that was really our first significant capital investment of $50 million. And it was a huge partnership for us as they then introduced us to a variety of auto manufacturers in the US, such as Tesla and Rivian and Ford and GM. And so that was really a huge partnership for the company. They went through all of our materials, and it was a really big step forward as we kind of received on our corporate resume a stamp of approval. And then over the next year, we continued to get ready for accessing the capital markets, the private capital markets, with a large investment bank. And so then over 2023, we ran a large process that culminated with an investment, as Sherman mentioned, from Appian Capital, where we raised $230 million of committed capital from Appian. Appian is a sophisticated investor out of London, where they are invested in mines around the world. So they have operations in Namibia, they have operations in South America, and then they're building out a US platform as well. So this was a significant investment for Appian. They have a lot of in-house diligence and a lot of people that looked at the company from a mining and processing standpoint and really saw us as the battery metals platform that they wanted to build in the United States. And so from all these processes, from where I started at HPS to then culminating with Appian, that was really the turnaround effort that I came into Missouri to accomplish. And so as Sherman mentioned, that was kind of a nice bookend process for me, but I really enjoyed working with Sherman and Chai. I got to know the EB-5 process really well. So I stayed on to help kind of facilitate a transition to the new CFO, Tom Bullard, who's going to do a really good job in Missouri. But what really attracted me to the company in the first place is a few different elements that I like to think about as kind of like what differentiates Missouri Cobalt or U.S. Strategic Metals from other offerings. And so one of the biggest pieces that's very, very important is that we're located in Missouri, which is a mining friendly state. So there's been mining activity in Missouri since the late 1700s. And then there's a lot of processing activity here. So the state is very comfortable with it from a permitting perspective and as well as an operational perspective. It's been very supportive, both in terms of operations, but also providing some financial support for us to get into production. So we're very fortunate to be located in Missouri, and that's been very beneficial to our development. The other big piece is we're located on private land. So when we think about any interactions with the government, they're not done at a federal level, they're all done at the state level. That makes a big difference in the US, and that just allows for much quicker turnaround times and much shorter negotiations as far as any permits. And we have all of our permits in hand in order to be able to operate the plant that we're building via this EB-5 project. And then the only other two pieces I want to discuss is when you think about our products, we produce 4 different metals: cobalt, nickel, copper, and lithium. And so that was one of the most interesting elements to me, because that meant that we weren't exposed to just one metal price. Sure, they're all commodities, they're all metals, but at the same time, any sort of idiosyncratic trends in cobalt or nickel, we do have diversification, which helps insulate us from any sort of one-off issues with one specific product. And that's very unique to our company. Most mines only produce 1 or 2 main pay metals. And then the last piece is Waste disposal is very important in the United States. We want to operate in an environmentally friendly manner and that's socially responsible. And so one of the benefits of owning and operating a historic mine site is that we're able to dispose of our waste on site in an ethical manner. Most people don't necessarily think about waste. It's not the most interesting piece to discuss, but it's a very important piece of our project. And so that's been a very critical to our success and the ability to build waste disposals on our site and have an integrated industrial site. And then the last piece that I want to talk about is when we think about the culmination of the EB-5 project or kind of the repayment, the methods of repayment. And so the main avenues that we thought through when I was with the company, the first would be an initial public offering. So that was what I really worked towards since joining in 2021. It's not a quick process that can't be done in 6 or 8 months. It really takes years to build out. And so we had to upgrade our audit partners, bring in new legal, really restructure the company and position it so that they could go public either in 2024 or 2025. The initial use of those proceeds would be to pay down debt and specifically the EB-5 debt. And then the other avenue would be when in production. We think that it'd be very easy to access public debt markets. The company's already proven that it's able to access private debt markets via HPS, Glencore, and also Appian. And so given that the public debt market should be open for a operating company, we think that would be a very easy method of repayment on the EB-5 loan. But ultimately, we're very, very comfortable with the project as we do have a lot of deep pocket investors that support it. And we've already invested over $250 million to get the project to this state. Sherman, Chai, back to you guys.
Great. There are two quick things. One that I forgot to mention, and one, Alistair, that I think would be good for you to elaborate on. One that I forgot to mention is that, we've already been granted expedited review by USCIS, and we anticipate having, full project approval, in the late March, early April timeframe. And Alistair, I think it would be good for you to talk a little bit about one thing that I think is very positive about the recent financing is that your old firm, HPS, even though, Appian, you chose Appian to be the lead lender, if you will, HPS wanted to stay in the deal. And I think that's a really important point because I think that's a bit unusual. You paid them back in full and then they decided to stay in. So I think maybe just referencing that would be your perspective on that would be good to hear.
Definitely. And so it's a great point, Sherman. HPS is leading our preferred equity round that we continue to raise capital for. And so they invested $15 million following the Appian refinancing. And so HPS has been a partner with the company, with the founders and myself since 2018. They've watched the business grow up and mature and really see it as a excellent return on their investment and want to continue to deploy capital and help the company grow. So it's really important to have those partners that have been with us for 6 years now and then continue to believe and support the business going forward. And most importantly, they're our first investor on the preferred equity round. And as everyone knows, $1 is much harder than dollars after $1. So it's a huge investment and really positioning the company well for 2024.
Shai, I think you're on mute.
Sorry about that. I'm going to start with my first question. And Alistair, I got this question when you were skiing in France, and I decided not to bother you. So, and that too in French, because I could have typed this in French. I could have asked this in French. But I've been getting this question where the LFP batteries, they're becoming increasingly popular in electric vehicles, and they are cheaper as well. So I'm sure that this was part of your due diligence. Can you shed some light on it?
Sure. So I think there's two important things to consider. The first is when you think about an LFP battery versus kind of your traditional 532 or some mixture of cobalt, nickel, and then lithium composition, is that the range on LFP batteries tends to be much smaller or much shorter distance. And so that's a huge advantage for traditional electric vehicle lithium ion batteries relative to LFP. And so range continues to be a problem, especially in the US for electric vehicle adoption, just because the US is one of the places where we tend to drive much further. And then the other point that I'd make is that whether it's Tesla or because it looks like one of the attendees referenced Tesla, but if it's Tesla, one of the important pieces to think about is that these companies have spent billions of dollars building manufacturing plants for specific battery chemistry, whether it's 532 or 811 cobalt nickel lithium ratios. And the amount of time that it takes for them to then transition to build a new multi-billion dollar manufacturing facility is just it's gonna take a very, very long time for the adoption. And so I'd say one piece specific to EB-5 is that adoption is going to be outside the maturity of the EB-5 loan. Um, and that was one of the things that I considered when I was at HPS is that it's really hard to predict, 5, 10 years where the market's going to go for these electric vehicle batteries. And so the way we structured the investment is, look, there's a maturity of 6 years. We're really comfortable that a lot of these auto manufacturers have spent billions of dollars. They're not going to one redeploy that capital into switching out all of their batteries to a new technology. Adoption is going to take a very, very long time. And so that's how we got comfortable with it, is it's not a 5, 6 year problem, and it may never be a problem, as I said, because they're non-competitive with traditional batteries on range.
Okay. I have I have a question about job creation. Um, the way I'm going to the question reads, I don't see any job creation guarantee in the PPM, which is required for EB-5 through the brochure. It does show it in our brochure, and I will address that separately. Let's connect after this. But since we are talking about job creation, Alistair was part of the capital spend that happened, and there are already jobs in place. So, Alistair, can you address some of that and how you categorize the EB-5 qualifying costs and how we already have a job creation that's significant before even the raise began?
Sure. So I think I outlined, and Sherman, if I'm fuzzy on any details, please feel free to correct me. But in the PPM, we've targeted roughly a 50-50 split between EB-5 capital and then capital from the company for a $204 million project. And the company has already spent $57.5 million as of 12/31/2023. We have an additional committed capital of $40 million from Appian, which we've not drawn down on. And then we're also pursuing the preferred equity raise that HPS anchored in December of 2023. So when we think about it, it's been a significant amount of capital, and all the money that we need to raise as far as the company match has been raised for the EB-5 process as outlined in the PPM, which has then allowed for significant job creation. And Sherman, if there's anything to add there.
Yeah, no, I think that's exactly right. That $57 million, I mean, the extrapolation of that accounts for, about 60% of the jobs. So, there's already been substantial job creation, and, the capital that's just been raised along with the EB-5 capital that we're raising is going to, finish out the job creation. But we're early on in the EB-5 raise. So for each of you on this call, if you were to come in, the jobs have already been created for your investment. So I think you can take a lot of comfort and confidence in that.
Since we are on the topic of capital, I have a question where they would like to know what is the collateral for the EB-5 loan?
The EB-5 loan has a claim on all assets, both an equity pledge from the parent as well as then any sort of residual collateral that's left on site. There are a variety of different structuring efforts which will move the EB-5 loan into a much higher priority shortly, but that's kind of the thing about it, is they'll have a claim on all assets on the site.
Alistair, would you be comfortable talking about a distress value and valuation of the project?
Sure. I think that distressed values are always tricky to align on, just because it requires a variety of different inputs and assumptions. So I can give my view, and then if people want to discuss it further, we can talk or ask questions, and I can try to clarify. The first thing I would say is that currently we're raising capital at $717 million valuation on the equity side. So that does provide significant amount of comfort that our ability to raise private equity capital at that valuation is substantial. However, if in a distressed situation, the way that I think about it is that you have ore in the ground that is the mining reserve. And so for a distress analysis, what you would do is you would take the cash flows of that mine and then discount them back to the present value, and then also subtract out the capex necessary to unlock that value. And so then the NPV of that mining asset is what drives a lot of the value for the company. And so when I did that analysis, I think we got around 180 to 220 million dollars. And then on top of that, you also have the processing assets that are on site, and so that's all the equipment that's gone on to the company. And so if we take the balance sheet, I think that's about 100 to 90 million ish on the balance sheet right now, and you say 60% recovery. And so then you're looking at around 280 to 300 million just between those two options. And that's kind of how I thought about a distress analysis back of the envelope on this call. And I think there's a few other levers for the company to pull to drive additional value above 300 million.
I am now going to go on to I don't necessarily want to address this question to Alistair or Sherman, but the question is about the capital stack and where the EB-5 lands on it. Please contact me and I will go over it with you, because I do need to use some visuals for you to understand this better. Okay, so just either WhatsApp me or email me and we can set up time to go over that. I am now going to move on to the permits and environmental studies. So the question is, as a mining company, projects are subject to several environmental, social, and governance. What due diligence has the company overtaken or undertaken?
Sure. So the important thing to understand here is that this is a historic mining site where mining first occurred at this specific site in 1844. And it was a lead mine for roughly 120 years. And then they also operated a lead refinery on site, and their waste disposal was inadequate. And what I mean by that is that you produce what's called tailings, which is the waste product from the refinery and mining operation. And that was just left on the surface in the 1960s. And so then you had those heavy metals that were running off into the environment. And so the way the founders actually acquired the mine in 2018 was that they partnered with the Environmental Protection Agency, or EPA, and then the Missouri Department of Natural Resources, MDNR, to put together a remediation plan to take care of the site and stop that heavy metal polluting into the local waterways. And so that was really the genesis of the company, was to start as a remediation project. And so we've taken great care to make sure that we embrace our roots and continue to be an environmental steward. We've done a variety of different studies, from a hydrology report to an air impact study. And so these are critical then as when we've gone for our permits. And so what I would say is, when we think about permits, it's not like there's just one critical mining permit. It's really just the collection of three different permits. The first would be a waste disposal permit, and so we have that in hand. We've already have built a metallic mineral waste pond on site and commissioned that. The next one would be the water disposal permit, which we also have in hand. And then we'll be building a water treatment facility to deal with any other water issues. And then the last one is an air permit. We've already applied for it. The last remaining step is that the Missouri Department of Natural Resources needs to be able to measure the actual air emissions from the plant, and then we'll formally be given the permit. But since we have had minimal comments, I think we're in a strong position to have all three permits. And so, to conclude on that point, environmental ESG generally is very important to us as a company. That's kind of underpins our process where we're safe, environmentally friendly, and then also a much lower emitter of CO2 emissions relative to the competitors.
Okay. This one is for Sherman. So Smita would like to know about the job creation in general with EB-5 and then how it relates to USSM.
Sure. So the analysis of, backing up, the way that a EB-5 project estimates the number of jobs that will be created is by doing analysis on the business plan prior to launching the offering. And that analysis is conducted by an experienced, econometrician. And in this case, it was done by Kim Atterbury, who used to be the lead for economics at USCIS. So she has a deep understanding. She uses a government-sponsored model called the RIMS-2 model that takes the capital expenditure of the business and creates three different categories: direct jobs, indirect jobs, and inferred jobs. And her analysis, based on the business plan that we gave her, was that the USSM project, as defined, would create 3,400 jobs. Roughly half of those, would be direct and half would be indirect. We're already 60% of the way through the spend because we've spent the $57 million that Alistair has already mentioned. So over 989 jobs have already been created. So I saw a number of the questions asking about job creation, and that's one of the excellent things about this project is that you'd be coming in and the jobs are actually already created and can be documented for the 829 process. So, and they've now raised 245 million more dollars. So, as we raise the EB-5 capital, there's, plenty of capital to complete the project as well. And the rest of the jobs, will be created. Upon completion with 3,400 jobs, that's 27.1 jobs per individual in excess of that. So, we feel very conservative about the job creation. At LCR, we always have a significant buffer. And in this case, it's a very high buffer of over 27 jobs per investor. There was another question about, expedited adjudication. And I just want to clarify that. That's a very important point. We believe we will get expedited approval, probably in about the next 45, 60 days. And we're very excited about that. And what that means is that the project has been reviewed because of its being in the U.S. national interest at a greatly accelerated pace. USCIS used to, in the past, before the Reform and Integrity Act, grant a blanket expedited approval. They no longer do that. But what we will do with the Clasko law firm is modify the I-526E template and include a request for expedited adjudication for each individual investor. And for those investors who come in during the, we're having investors come in every day. And as it, if we get when we get the expedited approval in 45 to 60 days, we will go back and interfile for the investors who have already filed and request expedited adjudication. So that will be done on a case-by-case basis by USCIS. But given the rural nature of the project, the longest processing time should be still under a year. And we believe with expedited adjudication, we will see approvals within 3 to 6 months. So, we believe this will be a very differentiated project from that perspective. I think hopefully I addressed those two questions clearly.
So Sherman, the question also started with they wanted to Susmita wants to know, why does the PPM there are a lot of disclosures in the PPM, right? I always call the PPM like a pharmaceutical ad, which promises to cure something, but then says you may die. So can you elaborate a little bit on it? Because, it pretty much says that we don't give you an assurance that jobs will be created. And so can you provide a little bit of clarity on that?
Sure. Well, so risk factors in a PPM are, driven by the attorneys, and they are driven by securities law, and they're driven to, protect the issuer by disclosing all the potential risks that could happen. So as Chai said, the pharmaceutical analogy, I think, is a good one. And, we're a nation that is very litigious. So yes, the risk factors it's a long list, and that is a key premise of the program, is that your capital is at risk. But as I said, there are many EB-5 projects that are out there that don't have other capital, that haven't broken ground, that haven't created any jobs. Here you have a business that is in a great market position with, national, federal level presidential executive orders driving demand for its product, and large, savvy institutional investors have not come in once, but have come in twice and continue to believe in the business, and most recently to the tune of $245 million. So, I think, and the spend that has already occurred at the site that, I have visited, and I welcome any of you to visit. I think it's a great thing to do, to visit the site you're going to invest in. The jobs have already been created for investors. So 989 jobs is enough for 90 investors, and we're planning to raise capital from 126. And the jobs required for the full 126 will probably be created by the end of Q1, Q2. So, we're very far along in job creation already. And, the risk factors are just written by the attorney to, say that until they're created, they're at risk of not being created. But, I feel very confident that we're in a very good place on job creation.
And I would add that that language exists in every single PPM for every EB-5 project that is on the market today, that was on the market 10 years ago. It's templates that insert all of that information. So
Well, I would say it's
in
in the
our-
offering for any EB-5 offering that is written by a competent attorney.
Yeah.
If you find one where there are no risk factors, I would be very careful, because that has not been written by a competent securities attorney.
Alistair, this one's for you. They would like to know who are the competitors here in the US for USSM?
Sure. So I think that there's been a lot of growth in the energy transition, specifically with battery or processing of critical metals in the United States. The major competitors to USSM would be Redwood Materials, that is located in Nevada. Another one would be Ascend Materials and Ascend Elements, different companies, but located in Boston and then Kentucky. And then American Battery Technology. Those are kind of probably the top four names. But one of the critical methods of differentiation for USSM is, again, that we have that historic mining asset. And so all of our competitors rely on recycled black mass material that they then buy in the open market. And so as more people try to buy that feedstock then becomes more expensive. Whereas a USSM, we could process more of our own mined material instead, if recycled battery material becomes too expensive. And then the last piece is too, as I mentioned earlier about waste disposal, but having an integrated mine site really allows for efficient waste disposal, whereas a lot of our other processing competitors do not operate on historic mine sites and then do not have the mine material.
Okay. Here's another one for you, Alistair. The proceeds raised by IPO will be used towards EB-5 debt. Does that mean that the loan payment will happen in the next 2 to 3 years?
No, I think one of the reasons why we talk about an IPO is one, we've put a lot of effort into positioning the company well for an initial public offering. And even if we do access capital via an IPO, those use of proceeds are fungible. We may use them for repaying the EB-5 loan or other sources or other uses of capital. But we'll work with LCR and then also be cognizant of kind of the guidelines for EB-5 loans. And if we all choose to leave it outstanding or have the option to pursue a refinancing, I think that would make refinancing the EB-5 debt at maturity much easier if we're a public company and doing that with public debt. So I don't think it's that I wouldn't think about it as we're going to do an IPO this year and repay the EB-5 loan. The cost of capital on the EB-5 loan is attractive. And so we'll work closely with LCR to make sure that we use any sort of proceeds to benefit kind of our investors in the EB-5 program as well.
I think, Sherman, you should talk about how we can't disinvest our investors too soon too, so that 5-year term does become important.
Yep. The at-risk provision is very important. I mean, we have no plans and no intent to redeploy the capital, but we do intend, and Stacy Hasty, the CEO, and I have talked at length about, the plan to repay it on time at the 5-year point. So, an IPO, if you put yourself in the company's shoes, should they be able to IPO, which I think, is a very good opportunity for the company right now, and they're focused on preparing for that. They'll take those proceeds and they'll pay down the highest and most expensive debt. So they're not going to pay down EB-5 first or soonest because, we're attractive, flexible, and relatively low cost debt. But, Appian is fairly pricey debt, and Glencore is as well. So, I think that's where they would focus. But as Alistair said, if they're able to become a public company, then refinancing the EB-5 debt on time and making sure everyone gets repaid will be, very easy. So I think the ways that EB-5 debt gets paid back are predominantly an IPO and or a refinancing. And we certainly have the company's commitment, and that's the way the loan agreement is written up, that the intention is to repay the loan in 5 years.
I also do want to add that if you look at the whole EB-5 process and when the investors become eligible for the return of the capital, it would even at the earliest, even with the expedite approval, the earliest an investor would become eligible for disinvestment would still be much closer to 4 years. 2 years is not a realistic scenario because the capital will have to be sustained for 2 years. And when that 2 years starts is also not yet clearly defined. So 3.5 to 4 year scenario still exists for eligibility of disinvestment. I think, Sherman, you already answered the question about deployment. Since the sustainment period definition has come out, there is no question of redeployment, correct?
Yes, there's, that is not going to happen.
Yeah. Um,
I think there was a question about partial investment,
yes,
and we welcome partial investments. The general approach that we have to that is that you have to work with your immigration attorney to do the source of funds analysis on all 800,000 plus your admin fee. And so you have to be confident that all 800 is accounted for and ready to go. And then we can accept a first tranche of, we typically like to do it 50%, 50%. So 400K. And then we'd say within a year, the next 400K. Now, the tricky part here is that since the project is rural and we expect it to be expedited, and we expect many of the investors to get expedited adjudication at the individual level, we really think especially once the project has expedited approval, I would say if you're going to do tranching, you should really do the first tranche and then the second tranche arguably only within 3 to 4 months, because what you don't want to do is have the adjudicator get to your file in an expedited manner, and then you only have $400,000 in there. So, we'll work through that with you if you want to do tranching into this project, but it will not be a year or a year and a half between tranches. So you need to have the capital ready so that you can do it fairly quickly.
Alistair, another question about exit strategy. What is the other exit strategy apart from IPO?
So I think the other one that we had mentioned is accessing public debt markets. And so we would just go raise public debt, and the use of proceeds would be to refinance out EB-5 debt with that. Now, we've proven as a company that we're able to access private debt markets repeatedly. And as a public company, I think that would strengthen our position to access public debt markets as well. And they'd be much more conducive to financing a producing and public asset. The other option would be to use cash from operations to repay EB-5 debt. I think that's a little bit less ideal just because we would have to accumulate a significant amount of cash on the balance sheet. And so we'd rather be a little bit more opportunistic and then just use the capital markets to repay it, just because we wouldn't be able to repay it piecemeal as we generate cash. So, but at the same time, that is another method. And so really there's those three, which are refinancing with public or private debt, IPO, or cash from operations.
Okay. When is the IPO planned? How likely is the IPO if recession hits?
So I think it's hard to pinpoint an exact timing. The way that I like to describe an IPO process is that you put in all the correct pieces and elements, you get to what's called an S1 filing, and then you access markets when they're open. And so what we've done over the last 3 years is we've brought in the right legal partners that can position us well for an IPO with Davis Polk out of New York. We recruited PwC to be our audit partner. And then we've been working with large investment banks like Goldman and JP Morgan, who can advise us on a public process. And those partnerships took years to build and get people comfortable with the business. And so now that we're in this position, the last piece of the IPO puzzle is really just building out a lot of the internal functions of the company and hiring more people so that we're then ready to be a public company. And like, is it possible to do it this year? I don't want to speak for the company, but when I was there, they were in a position to prep for an IPO either later this year or early next year. But it's up to them, and I think it's hard to say, hey, like, we're going to pinpoint a specific date. It's more you put all the pieces in place and you file your S1, and then you want to make sure you're in position to do it for when the market's open. And then, Chai, what was the other piece of the end of the question there?
About the recession.
Oh, the
Would be
recession.
affected by the recession?
Yeah, I mean, the recession is hard to say. I think that gets into personal opinion. So my personal opinion is that equity markets have been closed for the last 2 years. So there's actually a significant amount of pent up demand for equity transactions, whether it's uh, private equity or IPOs or follow on equity offerings of public companies. So I think that there's actually a very constructive backdrop for 2024. And then also with the federal funds has been consistent at around 5.25 to 5.75. And so given that we're not in a rising rates environment anymore, that also is a much more constructive path in order to pursue an IPO. So I'm a little bit more optimistic than a recession case, but either way, I think the company would be well positioned given that equity markets have been quiet for the last 2 years.
Okay, well, we have about 7 minutes left. I am going to ask, this is a question that Sherman's answered, but I'm going to have him answer again, is when do you expect the I-956F approval? For
Yeah, I would say late March to early April is what we anticipate.
Yeah. And the last question is, what is our interest rate to as per the PPM to USSM? What is the interest agreement?
From the
Between us.
EB-5 loan to USSM is 7.5%.
Okay. That is, I think we've covered most of the questions. And again, I encourage all the participants to get in touch with me. If there are questions I haven't answered, I'll be happy to do so. My email is ccarve@lcrcapital.com, or just go to our website. And I really, really want to thank Alistair, meeting Alistair and just seeing all this knowledge in him. I really wish I had I could have a cord that I could plug into his brain to mine. I would have done so, but he's an amazing young man, and I have a feeling we're gonna see a lot more of him and hear a lot more about him as we succeed with USSM. So thank you very much. Thank you for
Shai,
giving us.
maybe also mention the upcoming session with Ron.
Yes. I also I am doing another webinar next Friday. That's February 16th, with Ron Klasko. Ron's a very well-known immigration attorney. I'm sure you guys have heard about him. Ron will do a webinar on 956, and all of your immigration related questions that you've been asking me. So stay tuned, and I will post the link and timings on our WhatsApp group. Thank you very much and have a good night. And Alistair, thank you for joining us so late once again, and I will miss you.
Well, thank you, Chai, and thanks to everyone else for joining the call. We really appreciate it. It's an awesome project, and LCR and USSM will do great. So really appreciate everyone's time tonight. And thanks, Chai, for the kind words.
Thank you.
Thank you, Allison.